Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, what do you need to be aware of? Well, firstly, as highlighted on Thursday's silver asset of the day, we got that typical post-European Central Bank sell-off on Friday. This actually gave you a great opportunity to add exposure on the metals if you needed any top-ups for your trading. In fact, last week we banked 1,750 points profit over 3 trades, including platinum and gold. So of course, for every 10 lots that you would be trading, that's $175,000 of profit in 1 week. For every 1 lot that you would be trading, that's $17,500 of profit. Now, these were trade opportunities that we identified with you last week as well on the week ahead report, with platinum in particular, which in fact rallied over 1,000 points since we discussed it with you last week on the commodity report, and gold of course too, which rallied over 600 points from Monday's low to Thursday's high. So we saw some really solid opportunities last week for you to capitalize on, and as we highlighted last week with you, hedge funds had a massive sell short position on the dollar. In fact, recently they added to that sell short, and last week we saw the dollar break down further, which of course moves inversely to commodities there. We've seen silver rally from $25 back towards $26.50 per ounce. Platinum and palladium have rallied over 1,000 points. Copper is now trading back near 10-year highs again. Oil is trading at the highest level in 14 months. GDX, the gold miners that we discussed with you last week, they're now trading back above 33 a share, up $3 from the monthly low. And we've said it a number of times that this is not a buy and hold market. That's completely the wrong approach right now in these fast-moving, ever-changing markets where you want to maximize it as a trader. Commodity markets are zigzagging sideways between very specific ranges, and it's super lucrative just to profit week to week from that volatility by targeting short-term macro-driven opportunities. Now, of course, last week on Thursday, the US Senate passed President Joe Biden's $1.9 trillion COVID-19 stimulus bill. This is one of the largest economic stimulus packages ever in US history, which gave President Biden his first major legislative victory since taking office in January. Now, elsewhere on Thursday, the European Central Bank, they increased their quantitative easing measures by stepping up the pace of emergency asset purchases to counter the rising bond yields that risk hurting global growth prospects in the Eurozone area. Now, both of these events were extremely bullish for commodity markets. They are inflationary, which leads to further money printing. So after signing the $1.9 trillion stimulus bill, President Joe Biden announced that the government will now turn their attention to the ambitious goal of spending big on renewable energy infrastructure and solar panel technology to combat climate change. This is estimated to be worth a further $7 trillion in stimulus. Unprecedented global stimulus measures alongside soaring government debt, ultra-loose monetary policies from central banks around the world. These are just a handful of fundamental factors that will continue to remain very bullish for precious metals in the medium and the long term. Silver, platinum, palladium, copper, and other base metals associated with the development of green energy, they're on the verge of a major bull run and are amongst some of the most lucrative asset classes to have in your portfolio. Elsewhere, oil prices, they've surged to 14-month highs. We've got US oil trading near $65 a barrel, whilst Brent crude oil is within striking distance of $70 a barrel. Oil prices are now up over 264% from the low seen in April of 2020, presenting savvy traders with just an incredible flow of back-to-back trading opportunities on commodities. Now, on the radar next week, we're going to be moving again into an exciting and heavily macro-driven week. The biggest market-moving events that traders will be monitoring will be the FOMC meeting and statement on March the 17th. Earlier this month, Fed Chair Jerome Powell, he disappointed the markets by stressing that inflation was not a concern for the central bank, whilst also ignoring any questions about rising bond yields. So Powell hinted that the near-term inflation, it's likely to run hot as the economy improves, whilst also maintaining that central bank stance to keep monetary policy ultra accommodative until its goal of maximum employment is reached. Higher yields, they're starting to sound alarm bells, and this is a very strong indicator that inflation is already creeping into the wider global economy. Now, the Fed has largely been ignoring this issue so far, which is why all eyes will be on Fed Chair Jerome Powell next week as he holds the press conference after the central bank's interest rate announcement on Wednesday. Even the European Central Bank, they came out on Thursday saying that it's concerned about inflation and the increasing pace of printing money, noting it would use the pandemic emergency purchase program to halt any unwarranted rise in bond yields. If the Fed comes out and says something similar on Wednesday, that could add further upward momentum to commodities and be another big catalyst. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. Firstly, moving over to platinum, which closed at $1,206 per ounce. You remember, if you go back and watch the previous week ahead report, we were talking about platinum as a buy opportunity here, where it closed at $1,129 per ounce on Friday after non-farm payrolls. This is where we established a position. In fact, we built another position earlier on last week for 2 trades on platinum in the last 7 days, and in fact we've been able to capitalize on this large breakout to the upside. It's been over 1,000-point move just in 5 days. Certainly that's been a really lucrative trade for us and our members at the Gold and Silver Club in the last week. Again, that was an opportunity that we highlighted to you last week. So if we have a look at the price structure now of platinum as we head into next week, you can see very clearly where we have now had a continuation. We've broken out of the bull flag here and we're back within the midpoint of the channel here, holding above $1,200 per ounce. Platinum has moved just under 6% in the last week here. Let's actually just move it over to some of the other metals here and we'll come back over to platinum very shortly. So gold into the close, closing strong here at $1,726 per ounce. Gold up 1% in the latest week. If you have a look at gold on the weekly chart here, you'll see very clearly where we've come back into liquidity, where we found support over the summer here at $1,676 per ounce. We've since then had a reversal. This zone here actually set up for the rally where gold went up 9 weeks in a row and then broke out to all-time highs last year. On the weekly, you can see very clearly a reversal here. And if you move over to the daily chart here with gold, as you mentioned last week, this was a buy opportunity to look at these sell-offs as opportunities to build further positions on gold here. We've had a really decent rally, over a $60 move off the lows in the last week. We've had the typical post-European Central Bank sell-off, which then got bid later on in the US session and into the close here as well. You're very likely again to see range-bound price action with the metals, but then my anticipation would be that we're going to continue to build momentum to the upside here. And you want to look at these pullbacks and dips lower as really opportunities to just keep coming in and out of the market. As I mentioned, it really is a trader's market right now. It's not buy and hold. Just really treat it as a trader's market. Have defined targets when you're coming in and out of the market. We're not long-term investing here. We're trading. You'll make a lot more by coming in and out of the market regularly than just looking to buy and hold. Case in point is if you just bought and hold last year, for example, from July or August onwards, you've effectively made no money in 9 months on gold here, whereas by trading it coming in and out of the market on a regular basis, you're going to be much more profitable. So with that, let's just move over to silver here. So if you have a look at silver, again, silver's had a decent rally off that 25 handle, closed on Friday at 25.90. As I mentioned on silver asset of the day, we like silver here between 24 up to $26 per ounce. What I would look at on silver here going into next week is essentially if we can get clearance above the 26.50 handle, this is where we could start to pick up that momentum to the upside and clear back towards a recent swing highs and neckline, which resides at the highs that we saw back at the beginning of February. That's the sort of price action I would look at. Again, you can often see just range-bound price action at the moment. I can't rule out that silver may need to retest again back towards the 25.50 to 25 zone, but ultimately you can capitalize on these sell-offs, these dips, as opportunities to buy right now, and then on these quick breakouts to the upside, staying nice and nimble, you can capitalize and bank your profits and just regularly come in and out of this market before it really starts to take off. Silver, as we mentioned previously, the Goldman Sachs target has also been increased with silver to $33 per ounce. Now moving over to copper as well. So copper, we have a position on 2. Copper is very close now back towards its 10-year highs. Copper has closed limit up on Friday and wouldn't take too much here to get a breakout back towards the 10-year high. So ultimately copper here, we're looking for higher prices. This is also evidenced on the energy markets right now as well. In fact, our position on energies is currently up over 4,900 points into the close on Friday. We've just seen an exponential market here to capitalize on. It's just been phenomenal, the run up that we've had on the energy markets. You absolutely want to make sure that you're capitalizing on that. And then just moving back over to platinum here. As you mentioned, platinum has rallied over 1,000 points here in the last week. So what I'm looking at as we go into next week, and as we're not that far off again from the 6.5-year highs, platinum would be just really taking out the neckline here, about $1,235 per ounce. Once we can breach above that level, I would then look for a continuation back towards that 1300 handle here for platinum, and really look at weakness as buy opportunities at the moment. But you want to have ideally caught this move last week when we identified it with you. It's already moved 1,000 points just in the matter of 1 week. It's up just under 6% in the latest week. So again, as we head into next week, it really is all eyes on next Wednesday's FOMC statement. That's a trade opportunity that you do not want to miss out on. You've already seen some massive gains here on many commodities over the latest week, which provides you with regular back-to-back trading opportunities. And in these times where you do have more uncertainty, increasing job insecurity, near to zero interest rates, the importance of having an essential skill like trading, it's become a must-have necessity. If 2020 taught you anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer just an option, it's a priority to make yourself recession-proof so you can thrive in this era of change, not just survive. The greater your data and intelligence, the greater your edge to navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators, it will not work in these market conditions. You want to make sure that you're utilizing a professional approach to the markets. If you want to gain the ultimate edge to really supercharge your wealth in these fast-moving and highly lucrative markets, you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach to the markets. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You also get real-time trade ideas, access to our institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.